Hey guys, so it's about 5 o'clock. Let's get to work and see what happened in the markets today. Jay Powell came and went. It was pretty much a nothing burger, I must say. The expectations were about, I think, 70 to 80% for the 25 basis points, so he got that done. The press conference were back and forth. I think there's too many questions and they're all repetitive and they're all about the same thing, and everybody tries to figure out what he's going to do next. In my view, these conferences are very, very useless. They should just, anyway, doesn't matter what I think, right? But they should just send a statement out, tell you what they're going to do, and, let us go on with our life and trade and look at the counts and at the charts and all of that, right? So we've had a little bit of back and forth. We rallied pretty strongly at some point. The Nasdaq was up about 1.5%, if I'm not mistaken. Then in the last 30 minutes, they sold them all off. I think it was a little bit of a positioning going into this with maybe some bullish expectation that he might not hike at all. Remember, we still have those daily option expiry that are creating a huge imbalance in the market. That could have been something to add to with the sell-off that we've had. I'm not, too concerned about kind of what happened today. I think very likely this might get reversed. I don't think he said anything that could necessarily derail the trajectory of the market. It wasn't anything massive. We didn't get any other news. Most of the stuff, it's kind of out of the way now. We've gotten through the CPI. We've gotten through the employment data. We've gotten through him. What else happened? Because it's been a couple of weeks of non-stop, tape bombs with the banks and everything else. I think those are kind of taking maybe another leg lower, trying to just kind of finish off this kind of less flush into the banking side, maybe a bit more weakness in there, but nothing really, shaky up into this market. I think the Nasdaq still continues to outperform. So just kind of giving you my thoughts there. I listened to the whole press conference. I was more confused than when I kind of started. At some point he said, that obviously it's going to be data dependent, but, he's not necessarily looking to hike, might just pause. Then somebody else asked, are you going to do any rate cuts later? And he's like, no rate cuts this year. So it was just a big mess, I guess. That's kind of how I would look at it, right? So we'll go and jump at the charts and take a look. We got some positions today. I bought some natural gas, and we bought some Ethereum. Let's see what's going on. Let me get my mugshot out of the way. Put it here in the corner and take a look. Listen, I'm thinking that this S&P 500 is still, and I haven't given this too much thought, until last night when I wrote this, that this could very well be a leading diagonal. Maybe that's why the sell-off in here as a wave 2, it's happening either as an ABC complex, something. Looks a little bit weirder on the futures market, but on, am I recording? Yes, I'm afraid. So I'm looking, right? And on the futures looks a little bit more awkward. In the cash market looks a little better. This is not updated. I'll update it tonight. But I think this is what's happening now. We're probably getting a wave 2 pullback before we resume the uptrend in the S&P 500. The Nasdaq, again, I'm not surprised about the sell-off. We were expecting some kind of a wave 2 happening. Maybe it's a bit too sharp. Maybe this is the entirety of the wave 2. I doubt it. So we'll see what happens into Friday. But let's take a look at the charts. S&P 500 here, right, closed off about 1.6 on the day after jumping higher above the 50-day moving average. And it's coming again back to 3,900. I mean, look at this. I'm just going to show you a clean chart. Okay. That's 150-day moving average. I mean, look at this flatness in the market. Not only it's flattening, but we're kind of converging. So eventually we're going to get an explosion out of here. It's a non-stop up and down next to the 3,900. That's the key zone in the 3,900. I mean, if you've been playing, and I haven't, butterflies or iron condors, option strategies in here, you've been minting money day in and day out because the market really hasn't gone anywhere, right? It's just been constant since the summer of last year at 3,900. You can't really get a lot directional in here. I'm going to stick with the bullish count. I continue to like it. I like what happens underneath the surface with the QQQ SPY ratios and the continuing move towards growth and the outperformance. Now, I put a chart this morning on Twitter. I don't think I have it here, but I would have to dig it out, and I don't remember where I left it. But I was showing basically what's happening. Oh, actually, I do have it. Hold on a second. Quick ratios. No. Performance. Main indices year to date. Okay, here it is. Look at the RSP. Down 194. The RSP is the equal weighted S&P 500. With every single stock in the S&P 500 has the same weighting. Versus the S&P 500, which is up 2.9 with the latest drop today. It was up about 4 to 5%. But the stocks that are larger in the S&P 500 are doing the liftoff of this market. You can read this in two ways, right? That this could actually be bullish, that people are moving into these stocks, or you can read it bearish, that what's happening with the rest of the stocks, like why aren't they rallying? And the market must be sick, right? If the equal weighted index, it's underperforming the market cap weighted index, then there must be something wrong with those stocks. Or people continue to buy these larger caps because they think, that good times are coming. I don't know if it's a play on safety, if it's a risk-off move. We'll find out. But I mean, look at the QQQ's performance, right? Almost 17%, 15% into the tech sector. And then you have Dow Jones, which is the weakest, 2.8. It's a bunch of banks in there, and we've gotten, hit on some healthcare and industrials and some materials. But that's a very interesting picture here. Let's go and dive a little bit lower. I mean, again, we're coming into this 39 support, this green line that I have on here, and we'll watch it. Let's take a look again. Ratio, QQQ SPY. Even with today's sell-off, I mean, look at how strong it still holds up in there. One more thing I wanted to say on the S&P 500. I mean, look at the accumulation distribution, right? We've broken above here. We're trending higher. This one today, got put on a negative column because you sold off and we had no buyback towards the end of the day. We'll see what happens tomorrow, but it's still in a pretty good uptrend. I mean, throughout the summer and towards the end of 2022, they continue to accumulate in here, right? There was not much distribution, just a slightly, but it was pretty much flat to break into the upside. I think there's still an appetite for risk. Look at the top 100 stocks in the S&P 500. I touched on this before. We're coming back and we start to have some rising moving averages in here. I think that might be a good opportunity on the long side, 20-day and 50-day. NASDAQ got rejected off this line, which I haven't modified since I put it back here. Since we hit this highs and when we were selling off. So right out of there, right below 13K, we got rejected, showing you this range-bound conditions of this market. Way above the 20-day, way above the 50, they're all pointing higher. When they point higher, that's the beginning of a trending market. You want to see that. You don't want to see any of this stuff, but this is good. Okay, and the more it stays like that, the better it is. You also have a crossover, the bullish, the golden cross. Nasdaq Composite is on the same. Now Dow Jones, look at this guy. Same thing. I left a line, the horizontal line in there. These are very important lines. Went up to it, came back lower. Into the daily drip, I'm looking at this as a wave too low. and again as a second wave pullback, with the comment, I don't know if I made it here or not, but with the comment that this could be a C wave of a flat, and this fourth wave could still come lower, but with today's move we went above that level, which invalidated the fourth wave, even if it's a C. So if we're breaking lower, the only way I would count this would be as a wave, some kind of a wave 2, 1, and a flat in 2, and then a break lower. So that, if this gets broken to the downside, I think that would suggest that you have a bit more to go. I got to think about a couple of alternates, but I'm looking at it as a second wave. Look at the sell-off right off that line, coming back into, again, it's probably going to be a big zone of demand on this guy. Let's go and just put it up on there. So it's probably, it's kind of right, right here. I was looking to touch some of the things back and forth, but you can see the move right there. You can see in here, you can see this, guys. It's not that precise, but definitely, that 31,500, I'm going to save this up. It is support. So we'll see what happens if they re-attack it back, or if this is wave 2 or ABC down in 2, and then we go. Pretty nice accumulation distribution too, and we have a crossover here, which is still not fully developed. But IWM took a dirt today again, coming back into the support. And this is, again, the small caps were not doing too well throughout the day. The Nasdaq was rallying, the S&P 500, the Russell was struggling. So the small caps, mid caps did not have a good day. Came back, coming back into the support. I mean, look at this big range in here. What I do like is this increased volume as you're coming off these lows. So there's definitely interest in here of them not letting the market maybe break to the downside in here. We'll see. Bitcoin, 27,154, that resistance up there, finally kind of, they squeezed higher just a touch and then pulling back. We might be starting the second wave, which makes me think about our Ethereum entry. But I think we have pretty good coverage there on the distance. So I might even add to the position if Ethereum comes back a bit more. Let's see, TNX, dollar, and I'll update this. Gold was kind of not doing a whole lot. I mean, I guess it rallied and then just kind of closed about halfway through. And then oil, you might see it a little bit in here with this kind of bullish closes in. I mean, 3 days of bullish momentum in oil, which we talked about at 65, was the levels where, I kind of said, listen, I think they're going to start buying oil in here and then pushing a bit to the upside. And, going back to 73, you're going to find resistance on there. And volatility, went up to 22, a little bit of a hammer on here, but they definitely came down from 31 to 20. I will see how they close off tomorrow, because there's not much else. I mean, I don't know what risk events we have. So something has to crack, something has to break for VIX to really rally. I think a lot of these risk events are out of the way, and now the market can actually trade. We took a position on UNG, and you can see the positions here. I'll update you guys maybe tomorrow or later today. I'll post this up. We went down to negative because Ethereum pushed back from 18 to 1725. The trailing stop is at 1480. I'll leave it what it is. I gave it about almost a 20% slack in there. Nat gas, it's only down, just a little bit. I'll touch on that. DRI, it's still positive, came back a little bit after it tried to break higher. I think it's still because it closed to the upside yesterday, and there was a close above that resistance, so that continues to look good. Gold today went a little bit higher, so that's, and then the banks, kind of got hurt today, so that's kind of where we are, and then that's S&P 500 kind of year to date. So this is what happened on UNG. I'm willing to take a chance in here. I see the accumulation that happened even on this decline. In here, you continue to have accumulation to rising accumulation distribution, which makes me think this is a second wave, or we're getting into the final fifth wave of this, maybe 1, 2, 3, 4, and 5, and we're going to the final stages. I gave it room to about, I think 650 on the downside. Not, not super ideal, like in terms of, the way the trade setup is, but natural gas, it's a little wild, so I don't want to get stopped out here. But I do think that the idea is correct, and that we will get a bounce back, maybe back towards 10, maybe back towards 885, and we can get a decent trade out of this guy. Let me see how it looks on the weeklies. Look at the volume, look at the capitulation volume in here. And then a couple of weeks into the 10-week moving average, and now kind of back to the downside. This is the final, the final move lower. I mean, listen, it doesn't have to go to 12 or 14. That's not what I'm looking for. But I am willing to start to take advantage of this, and I will continue to press it on the long side, even if it's making, if it's coming lower in here. I think we're going to get a decent bounce out of it. So we talked about this. Oh, one thing I wanted to still show you is the HYG. This is the high yield corporate bonds. And, they kind of show when people buy this stuff, it's still more of a risk on move. And look at this guy, right? Just kind of flat. As the market makes new lows in here, the HYG did not. So this is not really confirming the weakness. And if anything, they bought it today. Again, just a measure of intermarket relation, where basically people, Wall Street is buying these high yield corporate bonds, which are on the riskier side, maybe looking for yield, and the stocks, have basically kind of sold off. So if this continues to climb higher, I would expect the stocks to do the same. So this is just one indicator, among many that we watch into all this kind of important chart list, to kind of judge the internal of the markets, and if all these are, kind of correlating with each other, or they're breaking apart, all of that stuff in there. So that's about it. I'll leave it at that. I'm gonna go. Let's touch on Bitcoin really quick since I'm here. I'm not gonna do another video on Bitcoin, but you know what? I don't have my MotiveWave software opened. So let me just go back and open the Bitcoin chart a little bit. And let's go to 1 hour. Hopefully you can see it in here. So yeah, sell-off. It doesn't seem to be wave C of a flat in any way. Now remember, we have a big resist support right at about, what did we say, 20? Did we say 25? Yes, 25.4. So there's still a bit more to go until that kind of happens. 25.4. So it's basically right here. Because this is the one that they try to kind of crack above it. Now it might be, there might be some resistance, some support here as well. But if this is the beginning of a second wave, and this whole thing was a wave 1, right? And some kind of a 1, 2, 3, 4, and then 1, 2, 3, 4, and maybe like an ending diagonal or whatever this was, crash lower. in maybe 1, 2, 3, 4, 5 like that, and then a B wave, and then maybe something like that over the next, you know, I don't know, couple of weeks maybe. In terms of weakness, we'll see, but I would definitely watch this 25, and then also watch the 61.8. Let's see what that is. So that comes at about 23,000, which is possible. Ideally, I would not like it to get below 38%, you know, and just kind of get too much into the 61.8. I don't think that would be necessarily a good thing for Bitcoin. That's kind of the last line in the sand, you know, because you start to open Pandora boxes, you know. But let's watch this, 38% right there. Sorry. 38% comes in combined with the previous level, right? So you have a cluster in Bitcoin right there where there might be some bullishness to the upside. Now, it might not be the whole thing, but there might be. I mean, I think there could be a nice, you know, maybe bounce trade out of there. And then you'll see, you know, if they do this and they come back towards the next one. I mean, look how nice they line up. Almost perfectly with the 50 and this zone of demand right there. And then you got the 61.8, which comes, you know, kind of right there. So anyway, they do line up. Markets are funny that way. So I'm going to close this off without saving it. Yeah, I'm done. Thank you guys for watching. Hopefully you like this. I started to work on the other website. I'm starting to put more information out there. I'm trying to put the course up. I think I'm going to run 2, where I'm going to go on a lower cost service that will have pretty much, you know, almost like a daily newsletter, kind of what I'm doing with the daily drip, just to give people an easier access to anything that I do and what I'm looking at the markets. If anybody will be interested, we'll see. And then I will have another one, which will be the upgraded version, which we'll call the Pro version, where we will move into, you know, this type of videos and, you know, targeted plays and, you know, write and you know, do a lot more, let's say, educational videos on there and talk about, so just a lot more detailed stuff, and I can organize everything a little bit better. So that would be an upgraded subscription, and I'm still kind of working the ins and outs of that, but I'll let you know as things kind of move along. And you know, if you want to come along for the journey, you're welcome. But I will be slowly shutting down this Telegram service. Maybe we'll keep the chat room, we'll see. But that's kind of where I'm at right now. So thank you for watching. I'm working in the background, and I don't have a coffee now. I have a little bit of tea. Tea is not that good, but you know, we just finished a video conference with the college coach for my daughter, because she's 17 and she wants to go do diving, and we're getting into a stage where, you know, she needs to commit, and so we just kind of finished that off a while ago. So that's interesting. I'm trying to get both my kids. I mean, my older son, it's already out, so he's a sophomore now. So next year he'll be a junior. Wow, time flies. And then my daughter next year will go to college. So then it'll just be me, my wife, and the cats. All right. Thank you guys. Bye-bye.